Hello guys and welcome back to another video in our channel Order Flow with Ethan. So I really want to thank you everyone for the support you've been receiving lately in our channel. There has been many views, many likes and many new followers. I really appreciate having all of you here and sharing the journey of trading the order flow with you together. And maybe here you can learn more about this great trading tool and use it in your trading. So today's video will be about trading supply and demand, the economics 101. So I'll explain how you can use supply and demand in your trading if you want to improve your trading in general. Because the rule of economics is basically trading the supply and demand, because supply and demand is the law number one you learn. If you go to learn anything about economics, that is the first thing that you will encounter, and using it in your trading career would boost your profit. So let's get into it. So what's a supply and demand in trading? Well, first of all, we have demand zones where buyers overwhelm the sellers, which means price rises, and a supply zone where sellers overwhelm buyers and the price falls. It represents where smart money enters or exits the market. So the demand zone is an area where we have more buyers and sellers, and where there's more buyers that want to buy than sell, then the price goes up. You can see that in the order flow by delta, by imbalances, and by how the POC is concentrated. Secondly, supply zone in when we have more sellers than buyers, which means we have more people that want to sell, they have more supply than demand, which immediately makes the price go down because more people want to sell than buy it. When more people want to sell, that means the market will go down eventually. So why do they matter? First of all, it shows key levels where price reacts, because when you go to a certain level, maybe at the top or the low of a swing time, you can see that the price react when it reaches any level, maybe through delta, maybe through imbalances, maybe through stacked imbalances, and it helps predict potential reversals or breakouts. It also forms the foundation for order flow analysis, because we're obviously trading the order flow. So that is the flow of orders coming. So we can see all the orders that come, and they're basically supply and demand orders, and then there's just a flow of it that keeps on going. And our job is to basically, our role, our mission is to basically analyze how that order flow is working. So here, for example, you can see market reaction to increased demand, which made the price go up. So here it's at the swing low, and then we can see that a lot of imbalances happening here, and then the market immediately went up. Same thing here and here once again. So how do we link the supply and demand to the order flow? First of all, supply and demand zone highlight where orders accumulate. So if you go to these levels, you can see that many orders are happening here, and this is a supply zone. This is a demand zone, sorry. Many people have huge demand for contracts here, which made them buy. Also, same thing here, and same thing here, which where they wanted to sell. So order flow tells us if those zones are being respected or broken. So when we have a supply zone or a demand zone, demand where we would have higher, we have sellers, for example, demand zone where we have more buyers overwhelming the sellers. What we expect from the order flow is to show us if those zones are being respected. If the demand happens once again, when the price goes back to that level, when it tests that price area, we can see what the market is actually doing. It also tells us if those zones are being respected or broken, which as I just said, and without the order flow, zones are just lines on a chart. So without the order flow, we have your normal traditional chart that I always talk about and try to make it look bad, because it is bad for you if you are trading. So when you have the order flow with you, you can see how all those orders are being processed in the market. You can understand why the price went up and why the price went down. But without it, you just see a price that's going up and down, but there's no orders into it, no supply and demand. You're just basically trading price action. So this is why the order flow is basically powerful. It confirms if supply and demand zones will hold. Same as you can see here. So we went back to this level, tested it, then we had those stacked imbalances. Market went down for a while, went up, gave us these imbalances here all over this place, went down, gave us a lot of imbalances here, buying imbalances, and then it once again then gave us all of those stacked imbalances here, as you can see. It also helps spot entries, and that exists with precision. Then it reduces false signals from just looking at price alone. So how order flow lets you trade your supply and demand? First of all, you have to identify a supply and demand zone. How do you do it? Go back to levels where we had a big stacked imbalance, for example, and the market did what it was supposed to do. For example, if you had a buying stacked imbalance, we expect the market to go up. If you had a selling stacked imbalance, we expect the market to go down. So you identify that zone. Then the next thing you should do is wait for the market to go back to that level. Wait for a highlighted, or we have it in the system in the order flow tool indicator. We have it installed in the system that when we have stacked imbalances, it just keeps getting highlighted until we test back to that level, until the market tested that level back, and then the highlight disappears. So you should watch the order flow for confirmation. When it goes back to that level, how is the price reacting? Do we have sellers stepping in again if it was a stacked selling imbalance before? Do we have stacked selling imbalances again? Do we have delta that's becoming more negative, or the price is not doing anything, or the price is going up? So what you expect is the market to go on your side, to actually sell. So if we expect that supply zone to act once again, we expect the market to do the same thing. We expect institutionals to enter that level and take other positions in that level, because that is a high demand zone. We expect the market to trade once again that level when it's testing them, and we expect it to go down once again. Then the third step you should do is to enter the trade in the direction of order flow. So what you should basically do is just take the trade in the direction of the order flow. For example, in that level, it could also be a good thing if we've had buying stacked imbalances this time. So we were selling imbalances. When you have buying stacked imbalance, it just means that the conditions have changed. I mean, the sellers were interested before. Now the buyers are more stronger. They're more interested to buy that level. So that means they're coming up with bigger interest over trading as the normal traders, okay? As the sellers that were there before. And thus, what makes the order flow go up? What makes the market go up in general? Then you should just use your stop loss around the zone for safety. So if you have a stacked imbalance around this level, so let's say this is the stacked imbalance, maybe your stop loss should be 3 ticks away. So I should expect you to enter around this level. If it was a selling imbalance, I expect your stop loss to be around 3 ticks above. So that's the best thing you can do to stay assured that you're not going to miss this position. So how do you spot high probability setups? You should look for strong zone plus large order flow spike, which means higher probability. But if you have a weak zone with low order flow, then you should just avoid to trade. Same thing that happened in the market this week. So if you watched our live stream, you would see how the market was really not balanced. It would do stuff that it normally wouldn't do. Why? Because this is the last week of the June contract. So we're turning to the September contract next week or the week later. And when the market doesn't really behave in the way it is, you should just avoid to trade. So strong zone plus large order flow spike. How do you know what's a strong zone and what is a weak zone? Well, I don't have the volume profile in this here, but you can just add it by going to the display. Then you'd find at the top what is it called, volume profile. Add it here, and then you can know if that is a good trading zone or not. So if you have a strong zone with a large order flow spike, many contracts being inside here, like 1,200, 2,000, 1,600, 1,500, this was a good market to trade, because when there's high volume, the market is doing good stuff. If you actually know how to trade, you would succeed in that market. Then you should look for confluence, zone, trend, plus the order flow, plus stacked or buying imbalance that was happening before. So just look for zones where buyers are interested and zones where sellers are interested, and watch how the market will behave when it reaches that level once again. And that is your job while trading the order flow basically. So the mistake you should avoid is entering zones without the order flow confirmation. If you ignore market trend or momentum, and if you overtrade based on weak signals, trust me, don't be surprised if you lose your trade. So to summarize everything we saw today, supply and demand zones show where price could react. Order flow confirms if zones will actually hold, and together they form a high probability trading edge. So I hope this video was helpful for all of you guys, and if you have any question about supply and demand or the order flow in general, you can just let me know in the comment section, and I will see you in the next video. So this was Ethan from Order Flow with Ethan, and see you next time.